So this session will be on microfinance and empowerment in India, client perspective from village level studies. I would like to extend my heartfelt thanks to the panelists present here. And it is my honor to welcome the distinguished panelists to come up stage. Professor Raj Lakshmi Kamath from IIM Bangalore will be leading the moderation. And I would also like to request the panelists to join us stage. Abhishek Anand, partner, Microsafe. Misha Sharma, lead Household Finance Practice Group, Dwara Research. Nitya Joseph, Institute Francis the Pondicherry. Sharda Gopal, research activist from Maharashtra.
Not from Maharashtra, from Karnataka.
Okay, I'm so sorry. Sharda Gopal, research activist from Karnataka. Thank you all. So we eagerly anticipate an insightful discussion ahead. With that, I now hand over the session charge to Professor Raj Lakshmi. Over to you, ma'am. Thank you.
Yeah, thank you all. We are having this session on microfinance, empowerment, and village-level studies. I've always felt that field studies and village-level studies for this sector are very important. They are like the canary in the coal mine. They kind of give you an indicator of danger that is impending. And for this reason, here we are having two kind of village studies being presented first. And as an audience, to give you a sense of what the researchers did on the field, I mean, it would be, I think, very superficial for them to just talk about it. So I told them to actually have structured presentations where they talk a bit more in detail about the work that they did and the findings of microfinance lending in the villages that they were studying, Tamil Nadu and Karnataka. So I will call upon Sharada to talk about her study in rural Karnataka first, and then Nitya will take over and she'll talk about her village-level study in the villages of Tamil Nadu. And after both their presentations, once you get a sense of their findings, I think then we'll begin with the panel discussion. Is that okay? Yeah. Sharada?
Thank you, Professor Lakshmi. Good evening, everyone. I'm Sharda Gopal from Belgaum district of Karnataka. I will present our experience, our small documentation which we did in rural areas of Belgaum district. So ours is a very small organization called Jagrati. We have a community organization, Jagrata Mahila Okkuta. We started our work some 25 years back in Belgaum district. So when we started, it was with forming SHGs in the villages. So we organized women into SHGs to do savings, very small savings. Soon, the government started Stri Shakti Sanghas. So our SHGs were taken as Stri Shakti Sanghas, and they were linked to the banks. And soon our ladies, the women of the villages, they got group loans from the bank, and they got revolving funds also. Thank you. Meanwhile, we started working on NREGA, the Rural Employment Guarantee Act from 2007 onwards. And meanwhile, when we were doing this NREGA work, because the government was taking care of the SHGs, we gave little interest towards that. But we were busy with NREGA, and the same time, Dharmasthala Gramina Abhivrudhi Sangha, they call themselves, but they are microfinance organizations only, microfinance institutions. They started their small groups in the villages. They started saying that they are savings groups only, but very soon they were very popular in the villages as loan givers. So they said, you form a group of 5 or 10 people, and we will give you loan. It was a surprise for our women, but it was pleasant surprise for them. They started asking for loans, and very soon it started with 30,000 rupees. And when the women paid back their money, the loan, they were offered 1 lakh rupees of loan. Mind you, it was not a loan asked by the people, but they were sanctioned loan. They didn't know what to do with that money. So, but somehow they managed with that money. They were repaying properly because women are good in repayment. So very soon, different microfinance institutions started entering the villages. Within years, we saw our women very deep into debt, and whatever they earned in MGNREGA was going into repayment. We were quite surprised and we were shocked. We tried to tell women not to go into loan giving microfinance things, but it was not in our hands. They were into it already, and they were into many microfinances. And we saw women absconding, children leaving school, and many women hiding, and they working 2 times a day for 2 wages. And within no time, we were hearing stories of women absconding, and there were instances of women going into suicides also. Though that worried us, then our community organization decided we'll do a small survey on what is happening with the women's life in the rural area. So we started a survey. Some 860 women, 860 families participated in the survey. Yeah, this is a survey form which is asking why women are taking loans from these microfinance, how much they are taking, what is their background, and how many microfinance companies they are into, and how much they pay every month. This is survey format we took to every house in the village. So 860 families were surveyed, and loans were usually taken in the name of education. So small loan is, out of 860, 161 women, they had taken loan of up to 50,000, and medium loan is up to 1 lakh, and 250 families had taken that much, and big loan is up to 5 lakhs. 312 families had taken out of 860. And how and the distribution of the families into different groups of the society. 288 families were from scheduled caste, and 86 families from scheduled tribes. Muslim were 130, and rest 356. And we found that out of 860 families, 151 children had left school already, and there were cases of suicides, 2 cases of suicides, and 6 women had left the village, and 7 women had sold the house. This is the common thing you see in the village today. You go to any village, any street, you can see one or the other houses where women are sitting and waiting outside the house for the woman who has taken loan come out of the house. And if they don't find her in the house, outside the house, they will go to the farm also, so that somehow they get the money. You can see this picture every day in any village. See, this is another picture of women sitting in front of the house. And insurance, they talk, a lot many people talked about insurance, but the thing is, the documents are not made properly because most of these women are illiterate even today, and they are not given proper information, and insurance is an extra burden on the women, and illiteracy and ignorance is used against these women, and there is no help when it is required. I can give you a case study of one lady, Savitri, who lost her husband. She had taken a health card, and this is again in Dharmasthala Sangha only. She had taken a health card of for 300 rupees, and her insurance amount she had paid 3,000 rupees. But when her husband died, she went to claim for the insurance money. They said all the papers were done, but they said your husband did not sign on the paper. So that was the reason why her insurance claim was rejected. So today, what we see in the villages, I was really very much pained when bankers were talking. But the real picture in the village is that women have no dignity at all today, and they are always on the run to earn extra money. And children leaving the school is a very common sight, and women are always under pressure, mothers hiding and children crying. This is a very common picture you can see in the villages. Thank you for the opportunity.
And that's as raw as it can get. We'll have Nitya now talking about her experience. Nitya, being a researcher, she'll probably give you that in a more structured way, but the truth is more or less quite similar.
Thank you everyone for staying with us at the end of a long conference. I'm going to present some research that we did, a study that we started in January of 2020 in Tamil Nadu, and the idea was that we will study all aspects of household debt. And so in the picture on the screen is when I started out to speak to someone, she said to her child, "Bring me my loan pie," that means my loan bag. And in that she had her microfinance loan documents, she had an SAG book, even though she was not an SAG borrower anymore, an old one. She had a piece of paper from the person who gave her an advance because she's a brick kiln worker from her employer. And inside her house, she had a jar full of little slips of paper from the money lender who she had borrowed from, and also gold loan receipts. And so these are all the different kinds of things that the different sources from which people were borrowing. And we started this project, and shortly afterwards the pandemic began, and so this became a study of debt in these villages during the pandemic. And I'm going to focus here on what happened with microfinance specifically. And the kinds of things we did is that when everything closed down during the pandemic, we started to do interviews by phone in 3 villages in Tamil Nadu. We started with the numbers of people that we had, and then we started to call people, and we tried to do a qualitative study like that. Like if somebody mentioned another microfinance group member, then we contacted them. If somebody mentioned the money lender they borrowed from, then we contacted them. And then so we did studies with 70 people over the 2-year period. And when there were opportunities to travel to the villages, then we traveled there as well. When we were there, we did interviews with microfinance loan officers and self-help group leaders. At the end, we also did interviews with microfinance executives to understand their perspective. We did a quantitative survey with 450 households. We interviewed every member of the household about their income, their debt, credit. And it was usually, we spent about 1 hour with each person. So we spent at least a day with each household, understanding all aspects of their finance. And then we went back to the villages and presented what we thought we understood from this study, and we got their opinion on what they thought, their analysis of what we found. And so where the study was in the district Kadalur, one village, And Kadalur is a district with one of the top 10 microfinance lending in India. And the other village came from Viluppuram, which was also close. And then another village 100 kilometers inside, but didn't see microfinance since till 2017, because it's a drier village where people were migrating. And so microfinance institutions had completely left this area out. And the other things we saw, that people from lowered castes were the ones borrowing from microfinance institutions. People who owned dry land or owned no land were the people borrowing from microfinance institutions, whereas dominant caste households and landowners were borrowing from self-help groups at a much lower rate. So if you look at microfinance loan taking by caste groups, it's lowered caste groups, much more. Christians who are Dalit in this area, they are much more likely to take loans. Primary occupation is agriculture, daily wage work at 100 rupees a day. There were people migrating to brick kilns, sugarcane cutting. Very few people were on the side of having their own agriculture or usually a cow. And shop or business was tiny. The reason for loan taking was food, healthcare, loan repayment, releasing pledged gold, ceremonies and social obligations, which are also a kind of investment. But things like agriculture input, asset purchase are also very small compared to everything else. So people who are saying, productive self entrepreneurs, little shops, this is not at all the profile of what we were seeing. And microfinance was something that was, I think I've been studying microfinance since 2008, and what we saw before the pandemic was the same. Every day is stressful. Every time there's a loan repayment, people are running helter-skelter, trying to find other places to borrow from to repay, because they know the loan officer won't leave their house. The kinds of things that people told us was that even if there's a death in the family, microfinance loan officers collect the repayment first. They said they'll collect it over the dead body, saying, first you pay us, then you cry. And so this is the kind of situation, and people are borrowing from all over to repay different sources. People are borrowing up to 7 loans in the names of relatives, and there was also conflict between women all the time, because one person didn't pay, the others are obliged to pay. When the pandemic began, actually people felt quite relieved that actually some people were saying we're eating better than before, even though we're not earning, because we don't have this large outflow, because nobody was asking us to repay. This kind of flexibility continued through the year, and early in the next year they started, microfinance companies started netting off loans, giving large loans and saying we'll deduct what was outstanding and then you pay us back, because it was looking like COVID was over in India. Then the second wave hit, and then there was no moratorium, and then people started to default, and there was widespread default after that. And by mid 2020, all the pre-COVID borrowers were marked OD. So this means that they're blacklisted from the High Mark Bureau, and they can't borrow from any other formal source. So women were left with these loans worth thousands of rupees, and they were really actually quite disbelieving that the pandemic happened and we had nothing to do with this. This was, it was not our fault that we didn't pay. We didn't work for 2 years, but no concessions are being made. And they not only were they being held liable because of the joint liability, they was enforcing individual OD and group OD, and then they started enforcing also center OD. So all 30 people couldn't borrow from any other formal source because of this. They were used to regularly receiving threats from loan officers, people saying, we'll lock your house, people actually locking houses, saying that your Aadhaar card will be blocked because it's linked to the credit bureau, so you won't get food from the rations. And people who were from these lowered caste groups, who were the borrowers, that people who were from higher caste groups were more likely to have a cow or something like this, and they were repaying. But it was the Adi Dravidar, Arundhatiar, and Dalit Christian women who were facing these problems by mid 2022. And so we held meetings in the village to discuss what was happening. And this problem of being having this outstanding to microfinance institutions, being hounded by loan officers, was foremost in what people were talking to us. And from at the same time, as people were complaining about loan officer behavior, we were also doing interviews with loan officers, and we really understood from them they were under immense pressure. They said to us that they had, before the pandemic, 100 targets, so they had to recruit 100 new women, and they had to get 100% repayment. There was no way they could identify 100 people each month. So they would go to agents in the village, then those agents would collect the money from them, and so they would visit 25, 30 women over the course of the month to get the repayment back. Once default started, they would have to go door to door to 700 or 800 people. Impossible. So we were seeing attrition rates. More than 50% of the loan officers had left branches. There was so much turnaround, and that made it even more difficult because the new people didn't know who the clients were, didn't know the places, didn't know the work. There were subcontracted collections agents from companies who were being sent also in the really vulnerable position, because people said, who are you? You're not even from the company. And they were supposed to also be doing this recovery work. But I think the kind of question is, also it asks fundamental questions about the microfinance model. If people, they don't, the loan officer doesn't know who the client is, even sometimes doesn't even see them. So how do you pick up cues from the ground about what's going on? We saw at the same time, just a very quick word, that self-help groups were in the dominant caste areas, in the intermediate caste, in the land-owning areas, especially if it was irrigated land. Self-help groups were working really well. There were self-help group federations. People had corpuses of 8-9 lakhs. They were accessing bank loans of 10 lakhs. And so the kind of question we have is, if we're looking at so much more. And just to say quickly that this was a study that had a huge number of people who were involved in it. So I just acknowledge also all my colleagues at the French Institute Pondicherry who did the interviews, and also thanks to all the people who at a difficult time during the pandemic gave a lot of time to us, talking to us. So this is.
I'm sorry, one of our panelists has to go on another panel, so that's why I had to hurry you up. I just have actually 2 or 3 tracks that I want to pick up with the panel. And Abhishek, you've heard this, probably not terribly new to you. In fact, for me, it's a sense of deja vu, actually. People keep talking about the crisis in this sector. What is it, the sector, that it's unable to see the cues on the ground, as she said? And why is it they're not able to learn from the past crises?
Right. So, of course, I mean, we've been saying this for a while now, and we've all observed that microfinance sector would face crisis every 5 years. But what has happened in the recent times is that we are now observing more frequent instances snowballing into major crises. So crisis is now happening every 3 years. And the sector is also becoming much more visible. Many of the microfinance institutions and small finance banks, they are listed, they are big. Many mainstream banks also have huge exposure in microfinance sector now. Now, the thing is that the model, the JLG model, was meant to bring low-income segment women and families and get them access to affordable credit. For few cycles, let's say maybe by second or third cycle, they should have enough transaction history with them, and then mainstream banks would have come in and would have given a more structured, a more affordable loan to these families. What we have seen is that in the microfinance sector, that the group loans keep on continuing to, let's say, 7-cycle loan, 8-cycle loan, 10-cycle loan. Now the problem here is that the way underwriting methods are designed in microfinance sector, it is for a much smaller ticket size loan. Once the loan crosses upward of 50,000, we have observed that the ability to pay and intent to pay parameters go haywire if you don't do a proper due diligence, cash flow analysis, and other background checks. So the overall lending methodology in the GLG sector or microfinance, private sector driven microfinance sector, is based on just low level of underwriting methods, mostly on social collateral and group guarantees. Fairly okay to include women into the fold initially for few cycles, but then if you move to a larger loans, you need to have customized product. Your If you are a financial institution, you need to have a proper product development arm within your organization to understand what will you do and how will you graduate out some of the well-paying clients who have higher absorption capacity. So I'll say that.
Okay. Another tack that I want to pick up with the panel is, compared to the past crises, what I've been hearing this time around is really the role of the credit scoring bureaus and the CIBILs and the credit scoring mechanisms. So, Misha, would you mind talking a bit about us on that? And then maybe I'll open it up to the other two panelists also.
Sure. So, thank you. I wanted to draw in from our study that we did at Dwara Research in partnership with Sadhan. And there, essentially, the objective was to understand how the new RBI regulations for the microfinance sector has panned on in terms of customer protection experiences in the ground, and what are the customer experiences in terms of key terms and conditions of the loan products being disclosed, as well as how household income assessments and debt obligations are being conducted. So two key findings from that study I wanted to highlight. One is that, of course, the RBI guidelines were very particular in terms of the debt to income ratio being 50%. And so it is very important to have a holistic household income assessment. So the issue there with the household income assessment is that, as we all know, for the informal segment, income is not formalized or documented, and there are no digital or documented cash flow trails for this segment. So income assessment is typically self-reported, and it is subjective, and a lot of it is also dependent on loan officers' incentives. So if loan officers want to actually lend to the segment, they would, make the household income assessment arrive at a number that is suitable and that meets the criteria. That's one. On the debt obligation side, what we saw is that the credit information company bureau reports were also incomplete, because while they did have data on GLG loans, they did not have data on SHG loans, gold loans, and KCC loans and other kinds of loans. So this is something that came out of our study when we spoke to the loan officers, the branch officers, as well as the CEOs. The second problem with the records of credit information companies was that the records were not being updated on a timely basis. So while a loan officer would come in and give a loan to the customer on the basis that the customer does not have any default, in reality it would be that perhaps it's not yet reflected in the CIC records. So those were the two key issues that we documented on the debt to income ratio side.
Nitya, you would have something to say on this from the client's perspective, right? The scoring.
Yes, I think also, listening to Misha, I think one of the things that we have in mind, that of course the credit bureau is really important in terms of, if you're talking about now, there, reading in the news all the time that there is a crisis developing in the microfinance sector. Having some kind of record of how much has been lent is really important to make sure there isn't too much lending, and to protect both the client and the lender. But I think the other concern that we had is during the pandemic, when it was a widespread crisis, if the credit bureau can be used to hold women hostage in a sense, like now, even 2 years, 5 years after the pandemic began, 2.5, 3 years after life kind of returned to normal, women are still blacklisted on the credit bureau because they didn't pay during the pandemic. And I think the other thing that I'm thinking about now is that, if there's been a lot of money pumped into this sector and there are new to credit customers who are now defaulting, microfinance has shifted very much to more vulnerable areas in the country also. We're seeing growth in Bihar, in UP, Jharkhand. And so if there are people who are defaulting there, if they are also going to be blacklisted in a certain way by the credit bureau, then what are the dangers? How do we think about, does credit scoring and this kind of accountability need to be something different for this sector, and other than if it's meant to be empowering, it's meant to acknowledge that people do experience crises that are not in their control.
Yeah. Numbers can be non-forgiving also. So there is one last question that I wanted to ask the panel, but if in case the audience has any questions, I want to give them the opportunity. If not, I'll have my questions, but I can open now to the audience. And in case anybody wants to ask, since you've gone through the study, please feel free to raise your hands and ask the panelists.
Thank you, Professor Rajlakshmi. Thanks to all of you. It's been the most delightful session, I have to say, because usually, and I've seen that over 20 years, the voices of women have moved slowly from plenary to second day to afternoon to technical and so on. And that's why I was very keen on coming and attending, and I think each one of you have brought us grassroots reality. That said, I'm not happy to hear what you said, because of course, it takes us back, like you were saying, to 30 years. What have we done in 30 years, JLG, SHG, small finance, MSME finance, they continue to be different models. We're talking about collaboration, but are we talking about the competition in these models and how they impact differently the women and so on? I think the questions that you raised are very valid. I don't have further questions, but I would like to say that please let's continue our voice and make it stronger. The voice that comes from the field. Thank you.
Actually, I can't think of a better note to end this panel on, and I think we have about 3 minutes. So I'll give each of you any last word that you want to talk about, and then we'll end the session.
So I wanted to touch upon what's in it for the women, because I think it resonates with, the theme resonates with some of the presentations our panelists made. And also wanted to draw upon, again, a Dwara study where we looked at the long-term impact of microfinance on intra-household bargaining power and women empowerment. So I guess one of the fundamental question comes down to the fact that if really this is what ground reality is, how is microcredit impacting women as well as women's empowerment? And I think the question holds relevance even today, because in the microfinance sector, there is some bit of a flawed narrative around how microfinance has led to women empowerment, and therefore from that perspective, the question is still relevant, even though there are a lot of rigorous studies which have found the other way, which is to say that there's not a lot of impact on those dimensions. So what we found in our study is that when we compare women who are new clients of microcredit to women who are long-term clients, and these are clients who have access to microcredit loans for 10 years or more, we find that actually there is no improvement in their intra-household bargaining power, and that there is, the theory of change is typically that when you provide access to microcredit to women, women's share in and control over household income and resources increases. But in our data, we found that there was no increase in long-term clients' loan amount usage as well as loan decision-making process. We also found that long-term clients were no more likely to be self-employed or work in paid work. However, we did see that when conditional on being employed in paid work, they were spending more time in income-generating activities. And so this result can be looked at in both positive and negative negative light. Positive because, okay, maybe it means she's earning more money for the family, but negative because perhaps she's earning that extra money just in order to be able to make those repayments. I think the interpretation can be divided on that. The other thing we saw is that 95% of the loans were being used for smoothing consumption and managing day-to-day finances, and was not going for necessarily for business expenses. However, at the same time, the burden of repayment and juggling debt from various sources was indeed falling on women. So I guess it's important to bring some of these data points, because we can then counter the narrative and then therefore think about the impact of microcredit from the viewpoint of financial well-being or financial health or ability to manage your finances better, rather than thinking of it from the point of view of women empowerment.
So I think we are over time. So a quick point. So credit can be a good credit, or it can also be a bad credit. It can harm and it can benefit. So it's a double-edged sword. And as the microfinance program is becoming bigger and bigger, and uh, we see there's a lot more visibility, it is important for the sector to focus a lot more on productive credit, productive uses of credit, and try and monitor the end use of the credit. And it is also important to develop capabilities around differentiated offerings in the microfinance sector. So as we move ahead, in order to prevent further crisis, it's important to invest a lot more on product diversification.
I am much worried about the dignity of women in rural area. These microfinance companies say that they are giving them a loan for as investment, but it is not so. The money is not used for any investment. And how much you can earn if it is invested in agriculture or in a small petty shop? How much you can earn with that kind of interest rate? You can hardly make it. You can hardly succeed in that. Business. That is one thing. Second thing is all the most of the money is going into consumption, and once it is consumed, the money is gone, and how the woman can repay the amount. So she has to go to another microfinance and take a loan and start repaying. And again, one more microfinance. This is a chain of. We see at least 5 to 6 microfinances where she has taken loan for every woman. That's what is happening. So she is going to every house begging for some money so that on Monday or Thursday she can repay. This is a very, very bad situation for women. I don't want to see this kind of scene in a village.
I think what I'm going to say is that I was an intern in a microfinance institution in 2008. And it was at the time when it was just starting out, and they only had 8 branches, and now they are one of the biggest small finance banks in India. And so I really have an appreciation for what the work was on the ground and also what this scale means. And I think that also, studying the sector since then, really appreciating the amount of work and the amount of thought that goes in from the point of view of people who are executives of MFIs, who are, in the top leadership and on the ground. And so while we're, raising all this kind of, criticism about saying, that this is what we're seeing, that it's very contested and even violent in a sense on the ground, that this is a way to appeal to people from microfinance institutions to, pay attention to this as well, because it kind of, even at a conference like this, is not at all seen or heard the amount, what it is. But I think the intention and the will to do something positive is very much there with MFIs. And so the question is, how is this taken seriously, and how can this change?
Thank you all. I think there is enough food for thought, and we'll end here. Thank you all for being a very appreciative audience.
Thank you so much. Thank you to all the panelists. As ma'am said, this is one of the most delightful session we have. Thank you for sharing all your valuable insights and experiences. I just request you to please stay on stage. We have some small token of appreciation. A team, please present that, and then we will have a group photo. I'd like to specially thanks Professor Rajalakshmi for such an exceptional and engaging moderation of the session. And we also extend our gratitude to all the delegates who have joined us in this session. Uh, Now, after this, we'll have a short break for tea. But I would request you all to please join us in our next plenary session. That will have investor talk that will be starting from 3:50. So we look forward to see you there. Thank you.